This meeting is being recorded. All right, good. I'm gonna give a second for people to sign on. You know, my friends usually are fashionably late, um, but I want to say like hi, how you doing? And then once the homie Kenneth gets on here, we'll do some intros, and I'll kind of give you a brief rundown of why I wanted to have this discussion. Oh, I need to grab my little guide. Hold on. All right. So I do have some notes here. Let me make sure I get them in order. Okay. And then I have some questions some people submitted before we started this that I'll try to get to at some point in the conversation. And hopefully I'll learn some stuff and some other people will contribute and we'll all exchange some info.
Invite your other blockchain savvy Bitcoin folks that will give us information.
To be honest, I don't know how many people have discussions about blockchain that aren't programmers or involved in the business of like an industry that's affected by the potential technological development. So I know people are having a discussion about cryptocurrency and people are talking about the potential for digital art being sold with NFTs and things of that nature. But the actual technology that underpins it or blockchain, I don't know many people having that conversation, which is why I wanted to go to the conference and see what that discussion's about and see what people are thinking the future will be. I find a lot of the people having the discussion around crypto are like arguing whether or not it's real or it's fake, arguing whether or not it's bad or good, arguing as to what to put their money into in terms of tokens or coins, and even understanding the nomenclature and the difference between a token, a coin, a digital asset versus actual money. And so some of the initial conversation is, how does money work? And so I've been having those conversations with people and getting into this idea of how do your dollar bills work? How does fiat currency work? We're so used to it and so adjusted to it, we act like we understand it. But a lot of people don't really get what paper money is or coin money is as different than a cowrie shell or as different than a piece of gold, and how money and currency exist in a world that is not the same as an asset. And how when we talk about digital currency, it's a misnomer in a way because it really is a digital asset. It's not really currency. And one of the things that got proven when Silk Road got busted and the guy from Pirate Bay and all these other things, they got charged with like money laundering or they got charged with like counterfeiting. And their lawyers were able to prove that they weren't dealing with currency. They were dealing with assets. And it helped establish cryptocurrency as being an asset and not in competition with the US dollar. Like there's like a law in the US, you cannot mint your own currency. You're not allowed to challenge the US dollar in terms of a national currency. And so crypto is an asset. And so does it rest in the same place as securities, like land or like investment, like stocks or bonds or things of that nature? Where do you find crypto then as an asset? Because it is a digital token or coin, and how do those differ? So I wanted to go and see like, what are the other applications? I know there's smart contracts and blockchain manages that. I know it can do currency exchange. I know you can do NFTs. I know that you can digitally utilize it to stamp or identify validity. And so I wanted to get a better understanding of that. And that's why I went to the conference and I wanted to talk to people about it. And in a way, like, yeah, you can invest in crypto similarly to you can invest in stocks, or you can work in Morgan Stanley. And when you work in Morgan Stanley, you may be a trader or you may be a janitor. You may be a salesperson. You may be a marketing person. You may be doing graphic design and make their flyers. There's all this talk about crypto, invest. You might lose your money. That's a tiny part of the world of industry that's going to revolve around blockchain. And especially for like Black folks, I want to open up all the opportunities. I don't want to segment it into coding. Well, what if that's not your skill set? What if you don't want to sit in front of a computer for 10 hours straight? What if computers will learn how to code better than any human will? what are going to be the skill sets and jobs that require humans? And there will be a lot of those. And so I wanted to go down this conference and learn about that. And coming back, I wanted to answer some of those baseline questions and then get into the depth if people want to get into the depth, and kind of let people know what I saw. When you go to an event with hundreds of people that are involved in IT, that are involved in wireless communication, wired communication, 5G, LTE, antennas, satellites, working with the military, working with, you know, people that are interested in social change, social justice. What are all these different applications? You know, not just cryptocurrency, not just be a coder, build computers. So before we get started and all that, it would be nice if everyone could just introduce themselves, who's here for now. I am recording this. And then as people join, I'll add them, and I'll share this recording with people, and hopefully it'll be informative. So my name's Chris. You know, I run Black Land Ownership, and I was really interested in how blockchain will affect real estate, and I'll get into that. All right, next up, introduce yourself.
I'm Laura, and I'm happy to be here. I'm up in Cambridge, Massachusetts, and I'm here because Chris put out this note, and I know he knows stuff, and so I care about that. And I also learned, and I watched some investors talk about blockchain, and so I have maybe some real questions.
Awesome, awesome. Kenneth, if you're able to, you want to introduce yourself?
What's going on? Can you hear me?
Yep.
All right. My name is Kenneth Otto. I'm a good friend of Chris. We've known each other since like 2015, 2013, almost 8 years, something like that. And you know, like Laura, he reached out to me. We've had conversations like this around blockchain very often. Myself, I'm a music artist. I rap and produce. My artist name is Dark Matter. I'm also, as Kenneth, I work in the cybersecurity field. I had an opportunity to go to grad school and study intelligence a couple of years ago and graduated. And from a like national security and intelligence perspective, intelligence is like analyzed, filtered, timely information that it can allow decision makers to make a value-added decision, and especially in government intelligence like FBI, CIA, alphabet agencies. But that's the conversation about blockchain from a national security perspective is important. I guess that's how I got exposed to it a lot myself, from the space of like, how are these technologies going to disrupt the ability for nations and global government institutions? How does blockchain disrupt this centralized paradigm that's like most government and businesses and agencies? They're like a centralized form of government, but blockchain is like a decentralized kind of platform, and you're seeing that it's having an impact because it's allowing less developed nations to tap into this technology to create a more decentralized structure for economies and exchange of commerce, and it kind of disrupts the paradigm, which has a lot of like Western countries like in power, or more advanced countries in power, when you have you giving like less developed nations access to this type of technology. So
right.
I'm from that standpoint, and also from the the music standpoint, the artist standpoint, being able to create a platform through blockchain where their digital content or their physical content can be made digital and then monetized in a decentralized format that cuts out middlemen that traditionally hold, or gatekeepers that would traditionally hold power in different industries. It's like the music industry. You have music labels that music labels that have a lot of wealth and capital and access. It allows smaller artists to, control monetize their, their assets, if they do it smartly. So I'm interested to hear what came up for Chris and how it will, and maybe share information as well from my background and see what we could do.
Bet. And if you all want, I'll put the link in the chat if there are people you'd like to share this with or would like to invite to the conversation. There it is. That's the link. And then the meeting ID and passcode. You can share that with people. Sisters of the Low End, would you like to introduce yourself?
Hi, yes, this is Basic. It's Pam Basic. How you doing?
Oh, what's up? How you doing?
All right, what's up? I saw this literally today, the email, and I'm hearing NFTs. I'm hearing all this stuff. It's something that it's not even an option. I feel you have to know about this stuff. You have to keep up with the current it as is. So I'm interested in just at least having a starting place, so I can do whatever research and learn how to utilize it.
All right, awesome. So, I mean, we'll just begin with a brief introduction of what blockchain is, kind of as written on Investopedia. So basically, a blockchain is a specific type of database and differs from a typical database in the way it stores information. Blockchain store data in blocks and then are chained together. As new data comes in, it's entered into a fresh block. Once the block is filled with data, it's chained into the previous block, which makes the data chained together in chronological order. Different types of information can be stored on a blockchain, but the most common use so far has been a ledger for transactions. And so you can think of it as a digital ledger. And
yes,
it's decentralized in that there is no one single person or group that has control, no one government, no one entity, but all users collectively retain the control. Decentralized blockchains are immutable, which means the data entered is irreversible. And so Bitcoin or smart contracts or other entities then utilize blockchain. And it may seem complicated, but the concept's kind of simple. It's just a database, which is a collection of information that's stored electronically in a computer system. So you can have spreadsheets, you can have large data, and what's different is kind of the storage structure. And so instead of it being in one place with everything in one and accessible or hackable or easily intercepted when transmitted, because it's in these smaller little blocks and each part is secure, you can't intercept the full data stream. And the parts you would be able to interfere with won't give you enough information to do anything with. And you can't affect the data that's been exchanged. It's immutable. So when you think about in our real lives, if we have a way of doing an exchange, we can prove I am who I am, you are who you are, what we are exchanging is what we say it is, and we use our money sometimes to do that exchange, which has been backed by a bank or the US government or whatever have you. Digitally, that can be very difficult because it's easy to impersonate a person digitally. It's easy to create a false object digitally. It's easy to change something after it's been created digitally. So once you're able to actually secure and lock those things in, that's revolutionary. And that's something that blockchain allows for, right? And we can get into more specifics in a moment, but I just want to keep that kind of level of simplicity. Cryptocurrency is a digital or virtual currency that's secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology, which is what we said earlier about a distributed ledger. Now, even the name cryptocurrency is kind of a misnomer because it's an asset. It's not an actual currency, where currency usually is initiated by a government or a centralized bank and is then not decentralized, right? And so if you run into certain issues where the government thinks you're a terrorist organization, they contact your bank and they can freeze your assets because there's a centralized place where your assets are held or kept or monitored, and that can be frozen. If you have a decentralized wallet and the government says, we don't know what you do, we need to freeze your account until we find out, the company that houses your wallet won't be able to freeze it because it's not in one place they have access to. All right. And so there are different types of digital assets or digital currencies. Bitcoin being one that's more stable. There are altcoins, and then there are ones that are backed or pegged to national currencies like DAI or DAI, which is one that's pegged to the American dollar. And like China just made Bitcoin illegal so that they can launch their own coin. But again, that won't be decentralized. That will be centralized, and the Chinese government will then probably want to know a whole lot about the people that utilize it. So for me, it kind of defeats the purpose having a decentralized form of exchanging currency or money or digital assets if you have to give the government all your info in order to use it. That just is not what would be interesting to me.
It kind of sounds like they would kind of it's the currency as we know it is going to be phased out. And I'm not trying to set up a conspiracy or what have you, but it's also being able to utilize, have a way of using money investing. For example, that was my initial point of looking at Bitcoin. I started looking at that stuff last year and was literally set up to start this year with a small investment. And the group that I dealt with, for whatever reason, stopped dealing with. So I'm still holding on. But I'm still interested. I'm still needing to learn about it.
Yeah, and so we can talk about cryptocurrency and Bitcoin. Bitcoin is one of thousands of cryptocurrencies at this point. And so you have ones that are more stable like Bitcoin, and they're an actual coin where they have their own blockchain. So coins like Bitcoin and Ethereum, they've created their own blockchain to then run other applications, to run their digital ledgers, and to exchange their coins. So you can have like a wallet where you hold your coin. You can have an exchange where you buy and sell. You have markets. That's all part of the cryptocurrency world. But the underlying pathway by which they work is the blockchain. So Ethereum has its own blockchain. Bitcoin has its own blockchain. They're coins. And then tokens don't have their own blockchain, and they utilize another blockchain. So if you're on an Ethereum system, you may have numerous types of tokens, but they run on the Ethereum blockchain. So they aren't their own actual coin. Does this make sense? All right.
Yes.
And so when you listen to media people, often they don't differentiate between the coin and the token. But you want to because it gets an underlying idea of blockchain. So I wanted to go to this conference to learn about blockchain technology because people seem to focus on the cryptocurrency. And it makes sense. Like the financial kind of incentive is very strong. But when you think of medical records, it's very important that your medical records are private and can be anonymized when you share some of that information and data. That you want people, like say, I had melanoma. So we want people to know the results of my test. We want doctors to be able to get all the information from what's happened post me being diagnosed, having surgery, having treatment, and all of that without knowing it's me personally, without affecting my likelihood of getting insurance in the future, getting hired in the future, because people will change how they hire you if you have a life-altering disease. If you have the potential of you smoked for 40 years, your insurance rate will be higher or lower. And so people want to be very careful with exchanging medical information that exposes them to possible issues. But we want doctors that have the information so they can treat people better in the future. So blockchain could possibly offer a lot of opportunities for that. If you think about real estate purchase, blockchain could help establish title in a much better way than paperwork and having a file cabinet in some office in 13 different buildings because the property's been exchanged how many times in a 150-year time period, right? If you want to think about collective ownership, you talk to a lawyer and say, me and my 4 friends want to own property. They're going to say, did you form a corporation yet? No, do not go into business with do not buy land with 3 or 4 other people. It's going to get too complicated. Well, smart contracts may help mitigate that. And so I wanted to go to this conference and see some of the applications for blockchain and not just crypto. But I did learn about crypto. I'll give you all a rundown of some of the things I went to, and then we'll just go kind of one by one and talk about each one. So first, the first day when I got there, I went to a presentation on holograms and like 3D volume-centric holographic data, and which is just a whole nother element and how they're going to use blockchain technology and what they're going to do to work with developers and open source information to give developers part ownership of content created to then make use and to make usable to consumers, right? So I'll talk about how Hologram can use, blockchain technology. I then went to discussions on hybrid work and what's going to happen now with people working part at home, part in offices, and how blockchain might affect some of that. If you are not talking, can you try to mute your mic, please? I went to a discussion where Hitachi is doing some stuff on forestry, and they're using blockchain technology and advancements in technology to be able to check for audio. And they put up like these feeds where they record audio and then transmit it to satellites where they check for disturbances in the normal sounds of the birds, the wind, the weather patterns, the animals for logging activity. And they're monitoring areas that are being overlogged. But you have to have high level of technological specialization, specificity, in order to then be able to say, that's a chainsaw, not a group of birds, and high level of sophistication in order to run audio feeds for 24/7 in hundreds of different parts of this jungle. And blockchain technology can allow for secure transfer of some of this information and storage. I went to another one on Hello Tractor, where they're doing basically an Uber for tractors in Africa and different countries in Africa. And so few people are using our idea of modern farming techniques with machinery, and they're looking at the percentage of growth that's possible if you can make tractors available to people. And blockchain technology can assist in that, right? Then I went to a discussion on Ethereum level 2. So there'll be Ethereum 2.0, which is kind of like another rail for blockchain to run. But also level 2 is how you expand your blockchain city higher and wider. Because right now there are issues with the number of transactions that can be made per second, and it's not scalable. So in order to do that, you have to package transactions, and how you do that and make that work efficiently, securely, and still allow for the purpose of it being decentralized and individualized. I went to one on encoded values and how new technologies have to be aware of social justice and trends in not just profitability being the number one motivator for action and decision making. Went up to the value of interoperability between digital and traditional assets. So anyone who's in crypto knows it is hard to get your cash money into the type of cryptocurrency you want sometimes and back to cash money. You may have to put your credit card into one of these markets or one of these exchanges. Well, at that point, is it anonymous if they have the credit card information? At that point, when you join Coinbase, don't you have to give some government information? At that point, is that decentralized? If you use Trust Wallet, well then, if it just disappears, how do you get your money back? You can't, because it is totally anonymous. They don't ask for any of your information. All you have is a key to be able to access your account and your wallet. So if the government goes to Trust Wallet and it's like, I want Chris Carr's information from this date, they're like, we don't know who Chris Carr is. We know that we have all these wallets. Someone has a key. I can't tell you who Chris Carr is or which key they're using. So in a way that keeps me safe, but it also leaves me open to like what happened in South Africa, where Bama's just left with billions of dollars worth of Bitcoin because they just fleeced on their exchange. Then I went to one on enabling frictionless borders and how border crossings could be made a lot easier using blockchain technology. And again, being able to verify people are who they are where they are, they're doing what they say they're supposed to do, and the items in their trucks or ships are what they are supposed to be. Because right now, one of the biggest issues, you got people coming in containers. When you're looking at human trafficking, the manifest says machine parts, but it's humans in the container. And there are too many containers to actually open them up, look at everyone, and check to make sure when it left, it had this in it, and when it arrives, it still has that in it. And that they didn't change the flags, or they didn't change the number, or they didn't change the IDs, or what have you. Then I went to one on the global CIO of Zoom, explained how Zoom adapted to the pandemic and what work and gatherings and meetings are going to look like in the future. And then the last ones were Google, and they were doing like, it was basically an ad for their like email update. It wasn't super interesting or having to do with blockchain. And then how blockchain is transforming finance, which was super interesting. And the lady was talking about real estate. The lady was talking about investing in digital assets. So like, if you think about, if we were to all pool our money and start a fund, right? Everyone puts in $10. So we have 6 people. We take our $10, we now have $60. That $60 allows us to invest in another fund that requires $50 as a minimum. If I only have $10, I can't get into that fund. But if we have our $60 as a group, we can get into the fund that has a minimum of $50. But at that point, we have to wait for something to accrue in that fund or something to happen. Well, what if we took our digital assets, put them into a fund, and as our digital assets created returns, people can invest in our potential digital returns before we actually realize our real world asset returns. That's futures, that's derivatives. That's stuff you normally have to be a verified investor to get involved in. And I didn't even understand these terms. There's something called a verified investor to where you can't invest in certain industries, indexes, or activities unless you have $600,000 or $1 million liquid in the bank and have been verified by another company that you are a verified investor, which means that people like me can never get into the game with certain investments and opportunities because I don't start with 600,000 liquid. I don't start with $1 million liquid. Now, this is done to stop people like me from putting in all the cash they have and getting fleeced by a bunch of finance people that know I don't know anything about finance. And so it's to make sure verified investors and verified investments are kind of checked by the state or kind of checked by an entity that says what's happening is. And so the SEC, like the Securities Exchange Commission, is there to try to make sure the businesses are doing what they say they're doing. People investing aren't doing like collusion. They're not doing price fixing. They're not doing kind of like insider trading. And there are all these rules to try to protect us as investors, as well as the entities that are seeking investment. All right, does that make sense?
Yes.
All right, so the conference I went to, it was a blockchain conference and an IT conference. So like the first one where they're talking about holograms, it was wild. These cats are literally making up a 3D visual presentation. And for them, the blockchain element is if you design something and want to sell it to a whole lot of people in the future, normally that's really hard. What happens is, Laura, if you own a software company, you buy my design from me or you hire me to work for you. But once I sign on to you, I'm giving up my rights to anything I create. In most cases, you pay me $150,000 a year so that whatever I make over that year, 2 years, 4 years, you own the rights to all of it. So when you use it in your software and your software is sold for $5 million, I don't get anything more than my salary. Well, with blockchain, you don't have to hire me. You have open source software that's available. I learned how to create something, and using smart contracts, I established how much I want it to be sold for when people utilize it and what percentage I get when your company is sold, when the software is used, or when people want to utilize my portion that I created. That's pretty awesome. So it's encouraging young people all around the country to be involved in creating the new technology, and they become part owners, not of the company, but of the technology that they create. And if it's used, well, then there you go. What if I got a percentage of every post I put on Facebook that got more than 100 likes? What if I got a percentage of the money of any video I put on YouTube that got more than a certain number of views? Well, right now, that's a 0.00000. And most people aren't getting much of a percentage. So blockchain could be used to incentivize something like that. Now, when I was talking to those folks, they work for a company called ICANN. I was like, what are you doing to make sure people who have normally been marginalized from this type of technology are included? And one of the co-founders was like, look, our technology is available to everybody. And I was like, well, look at this room. This conference was available to everybody. How come I'm the only one that looks like me here? And he was like, you know what, you're right. We got to start a conversation. I was like, how? He was like, come talk to me. See me afterwards. Come talk to my CTO. And they were some of the only people the entire week that were that direct. And we're like, we will get on this. Most of them were like, oh, well, we done that. Oh, technology is not that. And they avoided the conversation. These cats, I met up with them. I exchanged info with their chief operating officer, their chief executive officer, their chief intelligence officer, their chief marketing officer, their chief technological officer, and they were on it, all right? And so one thing I saw immediately was there were almost no women at this conference that were owners, and there were definitely almost no black people. I didn't see a single booth of a black-owned company out there. And there were hundreds of booths. But at the hologram thing, there wasn't a whole lot to learn in terms of blockchain, but it started the reality that in engineering and software engineering and tech, cats are not having a discussion about where the women at, where the black trans people at. And they don't want to have the conversation. And so in thinking about AI and machine learning, heavily involved in blockchain. And it seems like space stuff, when people talk about machine learning or AI, it's not. It's literally developing software that develops itself. It's literally doing things where if I buy something once and then they offer me something and I don't like it, it somehow remembers that and learns not to offer me that in the future, and that people who buy like me don't want to be offered things like that. And there's not a person on the back end doing the reiterative process of trial and error. The computer does it itself. That's heavily used in blockchain technology, and it's coming up with bots and other intelligent software doing the trading for people when it comes to crypto. But that's separate. With the hologram thing, it did get into being able to explain to you right now, like if I wanted to show you how a computer system worked in a 3D model, that's where a hologram would be super dope. Or if I want to break down an engine to you, instead of a drawing, I can take it apart in 3 dimensions and show you this is how everything works with itself. Now, if you want to exchange a picture of your proprietary engine, you work for Ferrari, that's when blockchain comes in, because you want to be able to send that and no one can steal it. Because if someone steals that engine, that's a multi-million-dollar theft. All right? And so it's understanding where these certain things rest. All right, so is everyone up to date where we at so far?
Yeah, there's a lot of information.
I know, I am recording this, by the way. Everyone know I'm recording it. So any questions so far, just on the hologram stuff? And then I'll go on to the next one.
Yeah, but okay, my question is like, okay, let's say with the engine thing, right? How you gonna keep somebody from stealing that? Because let's say I have it on the blockchain and then I show you, and what's stopping you from just looking at the hologram and copying the information on a piece of paper or something like that and like analyzing it like that and then just taking it elsewhere? You get what I'm saying?
No, it's a good question. How do you stop fraud in any endeavor? Once it gets to the human, it's always you're running into human error or a purposeful humans deciding to lie, cheat, or steal. The difficulty in the past was, how do I send it to you? Like right now, if I wanted to send you a secret communication, Kenneth, there's an ability in my chat to put in your name as Kenneth, and I can send you this note. And so I just sent you a note nobody else can see. So in a way, it's encrypted. But there's some students in Melissa's classes that know how to make it look like I just sent it to you and I sent it to everyone in the chat so they can access what I thought was a secure communication. That's where the blockchain is important. That if I'm planning to send you something in a secure manner, it cannot be intercepted. And it goes only to you. Now, once you get it, can you show it to other people? Yeah, you might be able to screen grab it. Yeah, you might be able to redraw it. Yeah, you might be able to download it and give it to someone when you're not supposed to. But that's a separate issue when it comes to security than the transmission of the information. Does that make sense? Because like, you can send me a music file through an encrypted message. You're muted. You can send me a music file through an encrypted message, but I can download that, put it on a USB key, and give it to anyone I want. And so the blockchain can't stop that. Encryption can't stop that. But now we can at least stop people from intercepting the messages. Or like if you're in the military and you work in helicopters and you want to send a message from your helicopter to the base and make sure that the opposing force can't hear what you're telling people, you needed to encrypt the messages. So you encrypt it on your side, you send it, and your home base gets it, they decrypt it, and they can read it. You can use the decoder ring to do that, like in the Cracker Jack box. There's so many ways you can encrypt messages. Blockchain is just one way to do it with digital information. That makes sense. I think you're still muted.
Yeah, that makes sense. That makes sense. Like you can't really. That's one of the big things I realized quickly about blockchain technology is that, yeah, it's like it does make things anonymous and secure, has all those benefits. It still is not like a panacea to like human error though.
That's
And
right.
fraud.
That's
'Cause if
right.
you have savvy hackers, they can kind of circumvent some things.
So
And I know government agencies are using their their intelligence communities to figure out how to circumvent blockchain technology. Like look at even the example you said with China, making Bitcoin illegal and wanting to come out with their own coin or their own type of blockchain technology. And a lot of governments are trying to figure out how to harness blockchain technology that they can control.
So the piece that's important is the decentralized element of it. If you're on a decentralized blockchain, theoretically, it's like a torrent where you have an item that's broken into so many little bits that if you intercept one part of it, you don't have enough to bring it all together and do anything with it. You intercept 5 parts of it, you don't have enough to do anything with it. It's in so many different parts that you can't find all the parts, intercept them all, and put them back together in the proper order to do anything with it. Now, if China starts their own blockchain, it's not decentralized, and they are probably putting in tracking systems or doing things where they can easily put the pieces together, identify who sent it, who's getting it, what they're doing, where they're from, and take action against those people. So I don't see the point in having centralized things that are supposed to be decentralized other than control. Like if you're the government, you want to do that. Me personally, I wouldn't fuck with it. I wouldn't invest in any of the Chinese centralized currencies once it's up and running, unless I've just opened myself up to all types of tracking. And it's going to be like that. There will probably be incentives so that people utilize it, or punishments if you don't. So if you're in China and you don't have a bank account and want to try to do any type of crypto, you may have to use their centralized service, which is now them being able to track all your financial exchanges. And I'd rather just stick with cash if I don't want to be tracked, you know?
Yeah, absolutely. Absolutely.
All right, awesome. So far, does anyone have any other questions about the hologram stuff? And if not, I'll move on to more of the interesting things. All right, sweet. So one of the things was what I was mentioning with Hitachi and the forestry and then the Hello Tractor thing is like, if you can get farming popping more in sub-Saharan Africa and in areas where they have viable climates and utilize machine learning, artificial intelligence to help people schedule when they do their pesticides, when they do their watering, weather patterns and changes, what time of year to plant, and not have to rely on an almanac, have drones, and then be able to rent tractors so you don't have to have the capital up front. One community could buy 2 tractors and then throughout the week, figure out who needs a tractor when, and then using blockchain technology, have it connected to whatever financial institution is giving loans so that people can buy the tractors, whatever way the individual then can get insurance on their tractor usage, seed, all those things. You're talking about kicking up productivity something like 60 to 80% in certain parts of Africa. Now, who was talking about this type of investment? It wasn't people that looked like me. It wasn't people from Ghana, like Kenneth's family. It's folks in Europe who are going into Africa and about to milk that cow. And so when we think about diversity in these realms, we got to be in the room to tell people, nah, that's colonialism. That is not leveling the playing field. That's a bunch of people in Belgium and Switzerland and France and Britain that are about to go extract resources from Congo, Zaire, Rwanda, Ghana, Senegal, Kenya, all over. But the technology is useful. It's not something to say, well, then don't do it, or fuck blockchain, fuck these colonists. It's like, nah, we need to make sure Africans and different countries in Africa are utilizing this technology to their benefit. And there is something special in that in some of these countries, you can't send American money. I'll get into this later with the finance stuff. If I want to send money right now to Ethiopia, I don't know their currency. So how can I send a US dollar to my homie in Ethiopia? I got to go to a bank or some currency exchange like Forex, change it into their denomination. The middle person gets a cut. It goes to them, and they got to have a bank account somewhere where they can receive it and take it out. Well, with crypto, nah. I can do a direct from person to person exchange. And there's a slight fee for gas if I'm on the Ethereum blockchain, or a very small fee depending on what exchange I'm using. Far less than what a currency exchange normally charges, or a bank, definitely far less than what a bank would charge. And so there are a ton of unbankable people that now can store and save money. And that's dangerous for these financial institutions. That's how they get paper. But when we think about farming, and this blockchain technology can open up a world of investment to where me and Kenneth can be micro investors, where if we got $3,000 total in, let's say Bitcoin, it goes up to 7,000. Instead of cashing out, send however many Bitcoins over to the homie in Ghana, let them turn it into their local currency, go buy a tractor. And now they rent their tractor out to other people in their local community, farming, bam, real money, either in real estate, in goods or services, or in consumable goods. Like commodities was an index on the stock market. We can't get into commodities. We don't have a trading license. I don't know stock traders who do commodities. Well, now we don't need them. We can do it local. We can do it micro. And blockchain technology can allow for that so that our money doesn't get stolen on the way there. We don't get, middle person 4 times, and to where right now, if you want to send money to certain parts of Africa, you're paying $30 to send $50. That's total spending $80 just to spend $50. Why aren't you only spending $1 to send $50? And what is $50 in some of these countries? Half a month's rent. What's $50 to some of my homies? 1/8 of an hour's worth of work. So it's thinking about like in that way for me, of like, cool, trackers, I don't know nothing about that. Farming, I don't know anything about that. Blockchain, oh, hold on. How can we get this exchange going? How can we make sure the money gets there and the right person gets it? Because right now, you already know, you want to send money overseas, you have some middle person, they might take the money and run, and it never gets to your cousin. And so crypto and blockchain can prevent that type of, you've seen the Nigerian scams. It won't be on Craigslist where people like, oh, give me your bank account number. And then no, we're not doing that anymore. All right. Does that make sense? And I would look into what Itachi's doing with the audio stuff. It doesn't really relate to what we're going to talk about today, so I won't go deep into it. But the technological advances being made and folks being able to separate sound waves into frequencies and do voice recognition. So your wallet can be set up on voice recognition. So no one in the world can access your money but you, because no one's voice sounds like yours. And you mix it with other biometric data, which is again dangerous, because once the government has all your biometric data, we're in a whole nother world. This is 1984. But the options are also there for a lot of good. All right. So if we go on to the next thing on hybrid work and how some of this technology can be used when we think about people not having to work in offices all the time, and diversity when it comes to how offices can be made up. If I don't have to come into the interview and I don't have to sit down in front of you and spend however much money to come all the way to Boston from New York, or go all the way to Alabama to find out I didn't get the job. We can interview over Zoom. We can interview whatever. But how do we do certain like verified transactions? How do I make sure that when I'm sending in my birth certificate or my social security card or whatever, that's not getting hacked or stolen in the transmission? So blockchain can assist with that. When you're doing work from afar, the blockchain and cryptocurrency transactions can assist with who knows what type of work where I don't have to show up with a briefcase full of money. I don't have to go through a central bank and say like, yo, Berto, me and you got to do an exchange, but I need to track it so that my business can get its tax break on it. If we do Cash App, is that really going to work? Well, now we can use blockchain and verify technologies that have connections to certain centralized banks that recognize it. And we can do business to business work, right? And again, that's not so specific about blockchain, but with the work thing, they were saying hybrid work is going to be the future. In doing surveying, about 10 to 15% of people want to go back to work full time. About 10 to 15% of people don't ever want to go back to work and just want to work from home. But about 60 to 70% of people, if not 70 to 80%, want a hybrid schedule. Somewhere being in the office 1 to 5 days a week and being home 1 to 5 days a week. We don't know yet how that's going to work out. But certain people don't want to be at home because they don't have privacy at home. They don't want their workplace at their house. They want to go to work, come home, and chill when they're at home. They don't want to have a camera on showing you what their background looks like. They don't want to show you what they look like, what their kids look like, their dog jumping up in it. And other people, and they enjoy going to work. They like the social dynamics of being at work. They like getting out of their house and traveling and seeing new things on the way when they walk, when they ride their bike, whatever. But then there are other people that they don't want to go back to work. They get bullied at work. A whole bunch of black people were like, why would we go back to that racist office? I like sitting at home with my dog and my coffee. I go to the bathroom when I want. I eat when I want. I don't have to ask my boss for certain things to do. I have autonomy. There are a bunch of women, trans folks, who are like, I don't want to go back to the office. When I go to the office, this dude looms over me and imposes physically on me. I don't deal with that when I'm at home. When I'm in the office, I gotta dress a certain way every day so that these people don't harass me. And so some people want to stay home, but most people want to have a mix, and figuring out that balance is going to be very difficult. But not a lot of that deals with like blockchain, so I'm not going to stay on that. I just want to let y'all know, if you're interested in that, that's a separate conversation on the future of work. But I did pick up some interesting info about that. Something that could be interesting is ownership of what you make at work. And NFTs kind of fall into that, on how your digital creations or your intellectual property can be owned at an individual level. And you, in a way, lease it to your job, which gives power to individuals at work in a way that would have been very hard, 5 years ago. You work for a lab, they're going to say anything you create while you work here is ours, any idea. So what if you're at your home and you come up with something having nothing to do with what you're working on at your job? They're going to say, nope, you were working with us at that time. We own that creation. And that's bullshit. They shouldn't own that. You came up with that. You didn't use their lab. You weren't at work. You weren't on their time. But they're going to say, nope, whatever you did during that 5 years, you signed off on that. We own it. And doesn't that stifle creativity? Doesn't that stifle entrepreneurship? Because people know, I won't own my material. The patent will go to this big company. Think Dell Computers actually thought of all the stuff they now own patents for? Nah, individuals did. And so with the idea, the principle behind it.
It's like Cruella. If you watch the movie Cruella, and she was working for her mother apparently, and she was like the Baroness, and Baroness was known as like the most amazing fashion designer, stylist in France. But then when Cruella finally worked for her, you realize all this woman is doing essentially is getting a bunch of designers and to work for her and to come up with ideas, and then she picked which ideas like the most appealing to her, and then she could say, because she has taste and she picked what the best idea was, and she had the money to like hire all these people to work for her, that it's the Baroness's work. And that was the one that kind of like frustrated Cruella, because when Baroness discovered Cruella, it was because she did like an arrangement of the in the front of the store, they have the arrangement with the way that the mannequins look and what they, all of that. So she styled it, and that was caught the Baroness' eye. She said, come work for her. But Cruella is like more talented than Baroness, because she's coming up with all these creative, stylistic designs from herself. She's not relying on a team of fashion designers to like just make the work easier for her. And eventually she started, you know, coming out with Cruella, like upstage in the Baroness. And that's like kind of what everybody wish would happen in real life, where, you know, it's enough of this, like these companies, these mega companies, like, you know, doing all this work for hire crap. I do understand from an entrepreneur standpoint, the like work for hire agreement does keep equity in my, you know, it allows me to retain equity by getting a service done.
If there's an idea of work for hire to where, look, you come in, you get paid a really good rate, but you own nothing on the back end because we don't know if it's ever going to come out. Like if I'm recording an album and I have a label budget, I can either bring you in and say, you want royalties, then I'm barely going to pay you to do this. But if it comes out and does well, you have a percentage of ownership. Or work for hire. You want $400 up front? You might be a session musician like, well, I play the horn for 20 minutes and I get $400? Yeah, because I've already done the thing to where I'll wait to back end, I play the horn, and the album gets shelved and never comes out. So cool, I'll take the $400 up front. But then your album's Kendrick Lamar. It's like, well, where's the back end money? You already lost, you don't get none. You wanted $400 up front. What do you mean? He sold millions of records. I'm supposed to have a percentage of that. You agreed to it. Now, an example could be Jeff Koons. He has a team of artists that make all of his work. Paperwork-wise, how could you ever identify who put in what effort to make what part of his pieces so that when it sells for $300 million, anyone gets whatever percentage? Now you can do a smart contract. Now you could really identify who did what at how much and who owns what percentage of the total art piece once it's completed. So when it sells for $300 million, John Jay gets this, Amy W gets this, Chris Carr gets, and it's all transparent. And no one can fudge and lie and say they did something they didn't do. But will people do that? Are people going to request that? Are people going to push the industry to force that? That's why I want to have these conversations, is to start poking the bear on what we can do with this technology to not continue to get taken advantage of. Because the companies know, and they are figuring out how to be like, no, we using this technology for our advantage, not yours. And we got to say like, no. We know what's possible, right? So yeah, that was a good example with the Cruella thing. All right, so does this make sense up till now? All right, awesome. The next one is the value of interoperability between digital and traditional assets. And it's this dude, Jack Sirocco, who works out of Central and South America. One of the better presentations I saw, because he works with banks. His company figured out a way to say, look, we need to legitimize crypto for financial institutions and get financial institutions on board. Figure out the regulatory issues, figure out which countries just won't work, figure out which countries want it. So I think in Panama what country was it? Nicaragua?
Bolivia.
Where was it? But
I think maybe it was Bolivia.
They started their own like state-backed crypto.
El Salvador. I think it was El Salvador. Yeah.
There you go. Smart people. This is what I'm talking about. In El Salvador, the government is saying we will allow one of these coins or tokens to be our like main form of exchange outside of our paper money. And so how do you do that? First, you have to have an understanding of how banks work with governments, which I can't tell you. I'm not an economist. I don't understand it. But the Fed here, like which backs or like kind of manages our U.S. money, is not the government. The government prints the money. The Treasury Department prints the money, but the Fed regulates the distribution of the money and the interest rates and the monetary policy. But the Fed is not the actual U.S. central bank. The U.S. money was backed at first by like the French and another group of people because we broke away from the British. And we had British money. We'd gotten a revolution with the British. And somebody had to say, well, what makes you legitimate to trade anything? One of the first treaties was the Treaty of Morocco, where the Moroccans recognized the American state saying, you all are an entity and we will trade with your government. But there had to be a bank to back the money. And so when you look at the Rothschilds and the early banks that supported the US government, that's a whole nother rabbit hole. So when you're trying to attach crypto to that, this gets into a realm again of it's fuzzy. It's real, and I'm not an expert in it. But once we accept that there is a centralized bank and a nation state, you have to be able to attach your crypto to it if you want to be able to engage in certain monetary policies. So one of them is, how do I get my US dollar into crypto and turn my crypto back to US dollars? So I have a coin called PooCoin. It's tethered to BNB coin, which is tethered to Ethereum. So in order for me to get it, I had to turn my money, US fiat, put it into a bank account somewhere so that I could attach that to Coinbase. Once it's in Coinbase, I can convert my US fiat into Ethereum. Once I turn it to Ethereum, I have to go into an altcoin marketplace, convert my Ethereum into BNB, and then in another altcoin marketplace, convert my BNB into PooCoin. So if I want to get my money out of PooCoin, I can't turn my PooCoin into dollars. I have to turn it back into BNB, BNB back into Ethereum, Ethereum back into US fiat in Coinbase, and then attach that to my bank account.
That's slow.
You see how slow that is? And if one of those goes down, how do I get my money out?
Exactly.
So if you have a more backed currency, I could literally go into one marketplace and exchange any of the coins I want for my tethered currency. And that currency can always turn into fiat money. In order to do that, though, you have to get the local bank and the local government to agree to whatever your market is or your exchange is. Just like how you have the New York Stock Exchange market, the New York Stock Exchange or NASDAQ, those all had to be sponsored or backed by banks as well as government. So that things traded are insured, are backed, are tracked, are verified, are considered valid. Right? And so this guy was saying how in Argentina, where he's based out of, the inflation rate's so high that if you get paid in Argentinian currency and you have $100 on Monday, in a month, that $100 is only worth the equivalent of $70. In another 2 months, it's only worth $50. So how do you hold on to money? You can't unless you turn it into US dollars and put that into a bank account. So you get paid $100 in Argentinian, whatever. You go to your bank and say, I need to convert it. They take 5 or 10 of your Argentinian, turn it to US dollars. Maybe that equals 20 US dollars. But it won't devalue. It will stay in the bank as $20. And when you come to get it in 6 months, it's still worth $20. And compared to the Argentinian money, it's even more valuable. So in a way, you've made money by storing your money in US dollars. But if you have a bank account, you only can hold on your Argentinian money that keeps losing value. So the wealthy people in Argentina change their money into other nations' currency and hold their money in US dollars or British pounds or euros. If you don't have a bank account, you can't do that. Well, if you put it into normal coins like Bitcoin or Ethereum, that's volatile. It might change 15% in a day. If you put it into altcoins, that might change 40% in a day. So what you want to do is have a currency that's pegged or staked to a stable coin. So DAI is staked to the US dollar. There's supposed to be one coin for each US dollar. It turns out it's not like that, and there's some fuckery going on with it. But theoretically, it stays the same value as a US dollar, and you don't need a bank account. You just need a wallet and an exchange so that you can get paid in Argentinian currency, attach to an exchange, convert that into DAI, and store your DAI. And now that's the equivalent of a US dollar, so that when Argentinian inflation hits, you're not affected by that, and you don't need a bank account. So unbankable people can finally save money in Central and South America.
Can I just ask about fees? I mean, you're talking a lots of moving and pieces and parts, but like classically, any classic exchange like this, everybody gets a piece of that action. Is this all like you're saying that there's not a lot of fees involved?
The fees are far less depending on the exchange and what you're using and what you're exchanging. So that if you're not using Ethereum, you don't have the exorbitant gas fees. If you're using Ethereum, you have to be careful of how many transactions you do, or it doesn't make sense because you're spending so much money to send money. But if you're not on Ethereum blockchain, the fees can be as low as the exchange dictates. And instead of, let's say, you want to exchange $50 and they want to charge you 10, it might be $1 for every 50 to exchange. And so they're still getting money, but they're banking on arbitrage and how Google works, where if they have 10,000 exchanges going, they only need $1. They don't need to try to hit you with only 10 exchanges happening, so we need $10 off of that. And so you need it to be accessible to people. You need it to be adopted. And adoptability is difficult right now because of all the steps you have to go from fiat to crypto and back. So by working with the banks and local governments, the adoptability should increase and more people can get involved that are not able to normally bank.
And
Go
will you
ahead.
quickly just say what fiat is? Just to,
Oh, like paper money, coin, metal coin money, like actual physical coin. That's a placeholder. Like fiat money. The point is, like, if I were to give you this and tell you this is a 5-cent piece, well, what if the metal that it's made out of is more valuable than 5 cents, depending on the day? Like if we were trading gold, the value of gold goes up and down, so it's not stable to use as a currency. So fiat currency, the $5 bill is always worth $5. The value of that onion paper doesn't influence what the bill is worth. Those nickels, copper pennies, quarters, whatever they're made out of, never is worth more than the value of what it's being exchanged for, theoretically. And so fiat holds a special place in that the item has no value except what it's been said to have. And it's an agreement that we all say it's worth $5. It has Jackson on the face, well, then that's a $20 bill. It has Lincoln, well, that's a $5 bill. We all accept that's its value. It's not like
It's based on the confidence of the country.
correct.
Currency, or the central bank who's issuing the country. No, this who wants a fiat currency that's issued by a central bank in Argentina? What is Argentina like? What value does Argentina have in the current world order as designated by the powers that be? Not much. You know what I'm saying? So,
And the government manipulates it.
also,
Other countries.
say it again.
So, and the government manipulates it more than other countries. In Venezuela, Argentina, Mexico, China, they print more money to deal with debt, and they don't manage for the inflation that should correspond. They just dump more cash, fiat, into the market, which then destabilizes the value of it. And because you're supposed to have like supply demand. That's part of like how money's supposed to work. Only a certain number of bills are in circulation, so the bills have a consistent value. So when you just add tons of more bills so that people can pay off their debts, that devalues the actual money. And in other countries, they do that more than the US. And in Europe.
Yeah, but you're not rid of the debt. You're just
adding more.
creating.
Yeah.
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 Because once again, fiat currency, the currency has no intrinsic value.
Right. And fiat currency used to be backed by the wealth of the nation, which would be gold at one point, or whatever the natural resource.
Or oil.
Exactly. There would have to be something of value, and then you issue notes based on that. Money is such a wild concept that it's all totally fake. So when people say cryptocurrency is fake, it's all fake. But it's what Kenneth said, that there's confidence in it, and it's backed by certain institutions that have military and can make people do what they want. You know?
Yeah, that too. Yeah, it's the confidence that, like, yeah, more or less.
All right. So the conversation with that is people look at the volatility of crypto because I want to get back to the interoperability, and you need to have more fluidity between cash, fiat money, and crypto money. Right now, there's a wall in between it in most cases. And so what this guy, Jack Sirocco, was pushing for more of an exchange between those and it easier. Because also, if you don't know how to set up your wallet, if you're not computer savvy, getting into crypto is not easy. And being able to get your money from cash into crypto and back out is not easy. Like if I try to explain it to my mom, not gonna happen, right? And so he wanted to make that process easier. And it's something to think about. And the volatility is how you make money though. So you want altcoins that can go up or down 20% in a day, because that means if I buy at $10 in the morning and it goes up to 40 by the afternoon and I sell at 40, I just 4 times my investment. Then when it goes back down to 15, I put in again and it goes up to 60, 4 times my investment again. If every day it just stays at 12, 13, 11, you're not making no money. So there's a way to use the volatility to make money.
You're making money on the short-term level. You're not making money on the short term, but the long, that's like ETFs, financial markets, they do well over a long game where you see consistent returns like 8%, 10% every year. And the compound interest that's going to grow exponentially. And there's more confidence in something that can be sustainable long term than technologies like blockchain that are volatile because they keep hitting higher highs more frequently than like the S&P 500 or ETF. They're hitting these higher highs and there's new plateaus. So when they drop down. This is happening. What you're talking about is happening in the span of a year.
Yeah.
Not like the equivalent of a Great Recession, you know what I'm saying, or a Great Depression, where the value of a fiat currency drops, or the market is reset every decade. These cryptocurrencies are being reset in their value, like every 3 months, maybe less. You know what I'm saying?
If you're doing altcoins, you're dealing with coins that are jumping 15, 20% in a week. You're dealing with a way to 50x in 3 months, whereas it would take you decades to 50x in a more stable type of investment protocol. And so you find a balance. DAI and some of the ones pegged to the US dollar, you won't even get an 8% return in a year. It moves even slower than a standard type of bank investment. But then you have these like kind of stable coins that do have enough volatility, so over the course of a year, you'll probably get 8 or 10. But then you have the coins I mess with to where you might lose 40% in 2 weeks. You might gain 137% in a day and a half. And so you find which one suits your investment interest. Most people, when they think of blockchain, they know about the volatility of Bitcoin. They don't know about these stable coins that are more secure than the stock market, that are more secure than indexes, but you can't make a lot of money. But they're good for holding your money if you're in Argentina. They're good for holding your money if you're in El Salvador, if you're in Venezuela. And so it's thinking about how to utilize this technology for what you need. And they're different uses.
Yeah.
Right? Does this make sense so far?
Yeah.
All right, cool. And I'm geeked because I'm looking at Africa where like there are over 1 billion people in the continent of Africa. The percentage of people that are on the internet is still below 80%. The US, we're at 88, 90%. That's not a lot of headroom to keep growing. How many people already have bank accounts? Something like 70, 60%, if not more. There are parts of Africa where it's at 20% of the people in that country have bank accounts. They can, on the phone now, exchange money. That is bread. That means billions of people in the next 15 to 20 years will not need a bank and be able to exchange money with people all around the world. That's exciting, and these other cats know it. These finance people, they know it. People may be sitting there like, Warren Buffett doesn't like Bitcoin. Yeah, his homies invested in it though. The companies he invested in are investing in it though. All right, now they're not only investing in it, but they know what's happening in Africa. They know what's happening in India. They know what's happening in a whole lot of areas. How many people live in South America? A lot. All right. And so, all right, I'm gonna move on to the next thing. I should do the other finance one, but I'll wait a second. What about enabling frictionless borders? And this one's interesting, is if you're doing shipping. Again, if I want to send stuff from me to Kenneth's family in Ghana, I got to go through so much customs issues to make sure that I'm who I am, Kenneth's family is who they say they are, what we're shipping is legal and allowed, it is what it says it is when it leaves, and it is what it said it is when it arrives, and how do we go through all that? Oh, we can't figure it out? Hold it in port for 13 weeks. You know what that does to the money? You just spoiled the fruit I tried to send. They had plans to sell it in 2 weeks. You just messed up their whole half a year. And so with blockchain, you can basically have these nodes of, we know it left when it said it was supposed to leave, it arrived when it said it was supposed to arrive, who actually signed for it, not this fake FedEx like, oh, your package got delivered. That package ain't on my front porch. Who signed for that? I don't know. And so in manifesting and shipping, logistics is still one of the most difficult things humans are trying to figure out. And these huge boats, we don't understand the magnitude. These boats are so big, you put boats, there's a floor of boats in the boat. There's no way. When you think about drugs, they harassing people on the corner. The boats got the drugs, and you can't check all those containers. But now with blockchain technology, you can certify, I don't have the drugs in my container. Don't keep it at port for 2 weeks while you try to figure out who does. And you can do, especially between Canada and the US, you can have special arrangements in technology to where you don't got to stop at the border. It's an instantaneous check. There's a sensor. It can scan everything on the inside your shipping container and make sure there are no people in it. Because when you think about shipping, one of the things blockchain technology can do is stop people from being traded and stop people from ending up in shipping containers. And allow, if you want to go to Mexico, you don't got to be caught at the border for 2 hours while they figure out who you are and da-da-da. Walk up, bing, 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 it's me. Where am I going? Bing, all right, bet, I'm allowed to be there. How long am I going for? Bing, okay, you got your hotel already reserved? Bing, yep, all right, through, thanks. And so there are a lot of applications for borderless, for having a more open border system using blockchain technology. And in Europe right now, the regulatory issues are real heavy. When we think about going from one country and next in the EU, now that it's open borders, they still have regulatory problems. Cigarettes are one of the issues. You pack up a truck in Belarus, you fill it with authentic cigarettes, it stops in France, people offload the good quality cigarettes, put up a whole bunch of fraud cigarettes in good packaging, and send it to Ireland. How do the people in Ireland know that it ever got switched out? They don't. They got the same bing, like the little barcodes, all that can be fake. Theoretically, with blockchain technology, nope, we know that you stop here, you change the stuff out, and what was put on is not what arrived at the final destination. And now due to COVID, a lot of regulations kind of went wonky, and people are on some Wild West shit out in Europe and just like not obeying the laws. They're not like certifying all types of things. And this type of technology can help verify. And if you're a business and have run into issues with verification, this can make your life a lot easier. I asked the guy who worked for one of the companies, is this a threat to certain people's businesses? Yes. There are tons of people that make money slowing up your flow. A whole bunch of people that make money verifying what you do is what it is you do, and you got to come through us if you want to do it. Give us money. It's a shakedown. It's mob shit. Now, they won't call it the mob. It's TCF shipping company, whatever. But you pay them so that they pay off the local government, and your joint goes through without any hitches. You don't pay them, your stuff doesn't go through without hitches. That's extortion. But that's common practice in most places. You ever been to Jamaica? You on the bus, you got weed on the bus, security dude with a big M16 stops the bus, and you get nervous like, yo, dog, we all about to get arrested? Nah, the bus driver says, everybody pass up $5 American. Everybody does, and they pay the security dude $100, and you keep it moving. Well, what if you didn't have the money? Oh, that man was gonna come on the bus and people are getting arrested. And so this is commonplace all over the world. It's not me trying to pick at Jamaica. It's not me saying anything like that. It's the shakedown is heavy all over. And so theoretically, blockchain can help eliminate that. All right, does this make sense? Any questions so far?
I mean, that's just a theory, though. It's kind of hard to see it, but I'm just going to say, of course it makes sense, but it's still hard to see that you would kick out the extortion guys with the gun for decentralized computer bits, you know?
Yes, and I agree that will it stay decentralized? And will there always be somebody that's like, nah, homie, you pay me first? I tend to believe that you'll still find that it'll be in a different way. In the US, like you get arrested theoretically in Mexico, give the Bama money right there. Like you a kid in college, you in Tijuana, you get caught with the cocaine, just give the Bama money and they say, cool, we're not gonna arrest you. Or we arrest you and then they call your parents say, well, send a 3,000. Then you get let out, you don't go to court. In the US, you go to court, but you hire the lawyer that plays golf with the judge, and now you pay $15,000 for that. But it's the same principle of the shakedown. You got to pay somebody to get out of jail. Would you rather do it on the front end where you're scared and they take all the money out your pocket, or you want to do it on the back end where you got to hope your family knows somebody who knows somebody and you got enough money to pay them off? But somebody's getting paid. I don't have an answer for that. All right. That's into another element. All right. Does this make sense? Somebody's getting paper. All right. So, and the guy that led that discussion, he worked for Bank of America at a certain point. He was a managing director at one point. And when I asked him about diversity, I asked him specifically about kind of like roles like people could have in the new businesses that are emerging, and how people historically that were not able to get into Teamsters, we already know has been historically racist. And when you look at what happened with unions in the 50s, 60s, 70s, how it benefited certain folks that were mob oriented and certain folks weren't benefiting. And so he was saying how when he worked at Bank of America, one of the things that he enjoyed most was he had to go give a lecture in front of 50 people. We had one of those tables where it's 50 people and it was all women. And he gave his lecture, but he ended up learning more about the experiences of those women in finance and business than anything else. And from that, he now wants to make sure with his company and what he's doing that he doesn't impose those glass ceilings, that he's aware of and listens to people about diversity and opens up opportunity to communities. And so it was interesting hearing him saying something as banal as shipping, that there's a place for diversity. All right.
I have a quick question.
Go ahead.
Something I always thought about with blockchain is like, what if like Russia shoots like a nuclear EMP into like the like atmosphere, and then like it takes out like a third of the national grid in the United States, or like physical electrical technology is like what it, you know what I'm saying?
Yes.
Like for even for example with like Africa, you got 1 billion people, but like majority of Africa, not majority of Africa, I don't even want to say what I'm about to say, but there's large swaths of Africa that don't have access to electricity, like proper transportation, roads, ports. You know what I'm saying? You know,
I can answer part of
like, you know what I'm saying? Like if you just if you turn off the light switch on the globe, that's essentially would cancel out this technology, regardless if it's centralized or decentralized.
So theoretically,
Somebody said that's false. Okay, wait, Rob Lee, say why it's false, yo.
hold on, Rob. Yo, hey, Rob, what's up? So theoretically, and Rob, chime in on this, but theoretically, even if you're in Africa using the banking on your phone, that doesn't mean your wallet or your exchange has anything to do with the African grid. And theoretically, there are safeguards that if the computer system goes down, there's an immediate record keep of where it was when it went down, theoretically. Now, what happens if all the power goes out? I don't know. What does Bank of America do? It's, go ahead, Rob. What were you going to say?
No, I mean, all of us here in America, I would believe everyone's there in America, we always have this illusion of what Africa is. And I just want to speak off of being on the continent, in the motherland, specifically in Dakar and Morocco. I want to tell people Africa is developed. It is 100% developed, as much as Europe is developed, as much as America is developed. If you go to Morocco, bro, Morocco is 10 times better than New York City. You feel me? And everybody who's a citizen of Rabat, Morocco, has free health insurance, has free health care, have everything, But I'm glad, Chris, you're bringing up just this cryptocurrency, because 100% what it's going to do is change the mindset of what people think is valuable. Is it valuable for me to give you money and have you do something, or is it more valuable for us to find a way to barter? Because when I hear you think of cryptocurrency, I think about bartering. Now it's going to go back to the days, well, I need this from you and you need this from me. So let's make an even exchange on whatever we want and find common ground. Now, as far as money is concerned, yo, think about Africa. At one point in Senegal, when I was in Senegal, they was telling me cowrie shells was a form of currency. So throughout the beginning of times in Africa too, also cows was your currency. If you was a man that have 100 cows, you was a king. You know, so we, the people, we define what currency is and what's valuable. Diamonds for a long time was no value until the Duras family made up the campaign and made it valuable. Right now, the number one currency is people currency. Me and Chris Carr could get 100 brothers to go chop down the woods on some land that he just got in the black and land ownership, and we could build our own new city and grow new food, and now be the currency, processing food, right? So
I think what Kenneth though is asking is a fair point in that, do we want to rely so much on electronic based finance? At a certain point, you had a cow, so if all the electricity goes down, you still can go eat. At a certain point, you had a house, some land, so that if all the money blows away or somebody robs you and takes all the cash you had in your shoebox buried in your backyard, you still could grow some food on your land and eat, right? And so I think it's a valuable question. And it turns into, where is blockchain? Where is the internet? Will it go out if all the power goes out? And I assume that for some of the more stable elements of it, that's tied to non-grid, like gas generator, yada yada server farms that already got redundancy 15 level, because Bama's got millions of dollars in this stuff. I'll play a couple hundo. I do not have thousands and thousands of dollars in crypto. Y'all know me. You see, I got the same feel I got for $45 a year ago. So I am not out here, but Bama's have billions in this stuff. And so, but it's a good question, Kenneth. No one asked that because no one is thinking EMPs. You talking about national security level shit. You talking like institution level questions. And so those are good questions. Those are good questions. I think there is.
I was trying to speak of Africa also too. Let's think about brother Akon. He's starting the movement of trying to start his own city, Wakanda or whatever, right? And the number one thing he's doing is solar. So just on the planet, just on everywhere that has not been, the infrastructure has not been given to them for it to be city-like, they're using more solar panels and they're trying to get that infrastructure. So even more so, that's a lane for us to try to go into and create the infrastructure of these places through cryptocurrency, through blockchain, through group economics.
So I will say this, part of it is how information is exchanged. So before I get to the last part, or last two parts, I went into one that's about like the Ethereum L2 landscape and the level 2 of Ethereum. So there'll be Ethereum 2.0, which should provide for more transactions per second, should lower the gas fees, and should be better for the environment, in that it's no longer proof of work, but it'll be proof of stake, I believe. And this gets into how blockchain even developed and how coins are mined, and that's a bit deeper than I want to get into right now. But within even Ethereum 2.0, there will be too much congestion. And so you'll have to be able to package and build things in groups, right? And that gets into cabling. That gets into the people that have the bread, they lay submarine something, basically underwater cables across the ocean. And there are only two or three companies in the whole world that are allowed to do this shit. And so they literally run cable from New York or Florida or whatever, all the way to the UK, to then set up towers to do wireless. You can't do wireless without wired communication at a certain point. So something that like, what we can do is think about then what's the infrastructural needs in parts of Africa? Where do we have to have cable laid to set up satellite connectivity? Because you can't just have satellites. That's one form of connectivity. And you can't have just landlines. That's one form of connectivity. You use all of it in conjunction to have this world of communication. And it's wild. It's stuff that I don't know anything about, but that engineers and IT people are heavy in. And it's all necessary to have this blockchain technology. If there's no cabling, no satellites, then none of us are talking right now. There's no wireless in your house unless there's something wired and tethered to an Ethernet cable somewhere. All right. And so the last part, and I was going to get into like social elements of being at that conference, and there are no black people and no women, and black women were almost non-existent. I saw like 4, and no trans black folks at all. Zero. Unless I got a pretty good eye in the way, even if people don't want to identify themselves or announce and come out with a sign like, I'm trans, I'm usually pretty good at like, I see, we good. Like, I got you. You know, I didn't see anybody. But I went to a discussion on how blockchain is transforming finance, and it got into investment groups. And that shit was so dope where like, my homegirl has an investment group now. You need $25,000 to get in, but they're expecting a 15 times return. So that means if you had $50,000, multiply that times 15, and that's the money you're supposed to get out in about 7-8 years. But you got to have 25,000 to get in. I don't have 25,000. So even if I had 5 G's and the 1, 2, 3, 4, 5 of us got together and said, let's go in a pool. And we put in our 5 each and we got 25. Now we in the game. Cool. Now we can be in the game. But while we wait for the 7 years for it to get our money back, what happens with all our money in it? The person that invested the 25, 25, 25, 25, 25, they're investing in other stuff. They're using our investment money and letting other people invest in our fund. So when you do a hedge fund, you're getting money from people. We invest in things, but then people invest in our hedge fund. With crypto, people are starting to do that. Now, again, this is economics on a level I don't fully understand and finance on a level I don't fully understand. But it's where you, me, Laura, Phil, and Kenneth, we go together. We got 5,000 in Bitcoin. We put that together. The number of Bitcoin themselves have a certain amount of value. But as its value increases, other people can invest in that increase and make money off of our pooled money. And our investment turns into an asset that can be invested in as a security. I don't know what all this means. I just listened to the woman and she told me, and she was really smart. And when people ask questions, she explained it, and she explained the difference between centralized finance and DeFi, which is decentralized finance. And this DeFi allows for people that are never in the conversation to get into these investment pools and create them. Now, you might say this is a pyramid scheme. It's not. A pyramid scheme has nothing actually being exchanged. A pyramid scheme is, Kenneth, give me $100. Pam, give me $100. Adam, give me $100. Berto, give me $100. Laura, give me $100. One more person, I leave with 800. But each one of you gets to get 8 people to give 100, and you leave with 800. Well, it means nothing really got exchanged. There's no good, no service, no asset being exchanged. And at some point, there are going to be 7 people that don't leave with any money. But with pooled asset investment and indexes, people get money, and the asset being exchanged is the coin or the token. And then the actual money that can be exchanged for that coin or token. And this is where you get into, you got to call her. You got to talk to Yamal Tamar. You got to hit her up on the internet. She knows more than I do. But it's fascinating. And so when you think about real estate, I would need collateral normally to get a loan on real estate. Do they give loans to black people in the same way traditionally? No. Has credit unfairly affected black folks? Yep. So what if I don't need credit? What if I don't need physical collateral? What if I want a loan for $100,000? I have $2 million worth of Bitcoin. Oh, you can take my Bitcoin as collateral? Yep. And while my Bitcoin is making money, you can reinvest my Bitcoin and we can make money together as a fund? Yep. So now I get property, you have my collateral, but because I gave you liquidity, you can use the collateral I gave you to turn into real money and do stuff for other banks? What? What are you talking about? Right now, if everyone went to their bank and said, give me my cash, that bank cannot liquidate all the money. They don't have the cash in the bank. So what happened with Robinhood is when everyone started trying to cash out with GameStop, they didn't have the money. They had to go to other financial institutions and say, give us capital, give us liquid cash so we can pay out these people. And they couldn't, so they froze people's transactions. So now with crypto and the blockchain, we can provide liquidity for other banking institutions, for other financial and lending institutions. And they give you money for providing that liquidity. Again, I don't understand all of it. I know it's real and it happens and that it's also fake as fuck, but just like regular fiat money. And it's happening. The people that were given the lecture on this, they are not me. Like they're not, yo, Chris, you don't know nothing about money. You don't have no money. You don't work for the people that have money. No, the people talking about this work for financial institutions that are running parallel to the governments and are running next to Merrill Lynch, Goldman Sachs, Chase, Bank of America. And those companies are involved in this stuff. Banks need money. You want to go into a foreign country and build a pipeline. You paying off warlords. They need cash. They don't take your, oh, I got a Bank of America account. So we can't do nothing with that. You better send in a crate of money, dollar bills. A bank is like, I can't give you $7 million in cash. We don't hold that. So the bank got to go call somebody and say, look, we'll send you this bank note, wire transfer. Can you give us a bucket, crate of cash money? Yes, and we charge you for that. You got to give us $300,000 if you want $7 million in cash. Well, now we can get into that game by providing liquidity through crypto. All right, so I know we just went all over the place, but any questions?
What was that part that you just talked about? It was group investing, but what was it? What was it?
Providing liquidity to other investments. Like basically, when you want to buy a house to flip a house, right? You can't go to a traditional bank for a loan because they want to do a 30-year mortgage. The way they make their money off of that is you want a $200,000 house, you're going to end up paying $400,000 for that house over 30 years because they give you the mortgage and you're paying interest, heavy interest. The way they realize their money is a 15 to 30-year payment plan. But if you want to flip a house, you want to buy a house and flip it in a year, traditional mortgage doesn't work for a bank. So you go to a different type of bank or a private investor. But those private people get their money from other people. And the people that give them their money get their money from another prime lender.
Right.
And so liquidity is hard. After a certain point, who has $4 million cash? And so people pay to get $4 million cash. And so there's an idea of if you're investing, people can invest in you. And with the proceeds made, use that liquidity to invest in other things. And that gets into futures and derivatives and things I don't really understand.
But the start of the category was, do you just called it group investing?
Yeah, you can invest in indexes. And so you can take, if you have one startup, someone can invest in you. But if you can get 4 or 5 startups, then people can invest in the equity of those 4 or 5 startups combined.
Right. Yeah. I mean, I'm following you, but I'm just wondering what they're what's that category? If I wanted to do research around this, what's that called? I mean, what's the term?
I would look up Yamal Tamar, YAML. I can write it. We got modern technology. Hold on. Oh, spelled it wrong though. And so she does lectures on this stuff. She has the nomenclature and the terminology down. But it's basically looking at crypto as a parallel to index funds.
Yeah, okay, cool.
And looking at group pooling in the same way they do with hedge funds. But utilizing digital currency.
That's really interesting. Thank you.
Yeah, and so you can mix it with real estate, crypto, and liquid assets. And you can have investment components in all 3 elements. And so I asked her, after she gave she did a great presentation. I asked her, I was like, so in America, real estate has been tied to racism. Whether it's redlining, whether it's banks not giving out loans, whether it's depossession, whether it's heirs laws, how can this affect that? And she was like, you know what, that's a great question. By it being decentralized, is there an incentive to continue racist practices, or is it not a singular entity that can deny your value? Is no one person or one company or one anything to say, we don't give money to women. We don't give money to black people. We don't like queer people. We don't like trans people. It's literally an equation. How much collateral you got? You want to invest in whatever? Does the computer think that works? Let's run it. Now, again, can that be misused or fudged a little bit? I would bet. I would bet certain people are going to get certain advantages or have access to certain things more than others. Hold on. Y'all, I got to let somebody in. If you have a question, ask it or comment real quick. Hey, Mr. Patrick? Yeah.
Hey, Rob, what time is it there?
I'm in Trinidad and Tobago, actually, and it's the same time as New York, 8:37 p.m.
Oh, awesome.
Oh,
I have a question. Like, can this cryptocurrency really get off the ground without government giving the okay?
yes, to the small early adopters. And to me, it rocks better without the government and without heavy adoptability. Once it's heavy adoptability, regulation for sure. So in order to get to a certain amount of acceptance and use, there will have to be government regulation. There will have to be centralization at a certain point. Even now, it's like if you and me want to do business, like I got to verify, like let's say we're trading or doing certain internet practices. I got to verify that you're not doing child porn on my website or they hold me responsible. When the internet started, it was like, I'm not responsible for shit people do on my webpage. I just own the website. And if Rob and Toussaint want to share pictures of 5-year-olds, that don't got nothing to do with me. Well, now the government's like, nah, bruh, everyone involved, y'all come see us. I need to know who's who, who's doing what, and if you let that happen, you're responsible. And so I think you're going to see more of that. But you're also going to see more decentralized. You're going to see more people who are just off the grid, who are not fucking with the government, who aren't fucking with centralization. And they're going to make it hard to access. You're going to have to understand how to use computers at a high level, how to use software at a high level, and how to be discerning so you don't get ripped off. Because Bamas are going to get fleeced. That is for sure. Right now, you got people who are like, oh, send me your wallet, I'll send you money. Don't ever send your key to anybody. You might lose your key and not be able to access your $1 million. Yep. And when you call up whatever company, you're like, yo, I need my $1 million. They're like, we don't know who you are. We
Yeah,
can't.
that's a scam, yo, because they be doing those crypto scams. Give me $5, I'll turn it into $1,000 in 2 weeks, shit like that. But and they're like, oh well, yeah, you set up the wallet and it's being traded on your wallet. But I'm like, how? What's preventing you from just fleecing me? Like, I don't get it, because you're like, oh, it's your wallet and your account. I'm giving you, at some point, I have to give you access to my account in order for you to flip money, like you say you're gonna do.
Yeah. So
And
you can
you know, what I
send.
mean, and the problem with that's the like the thing with blockchain for me is like, okay, it's built on the premise that there are like flaws to centralization that doesn't allow for inclusion, right? As you could just maybe just sum it up like that, right?
Right.
But can't really like just go off and be like the opposite is like foolproof.
I think it's
You'll
not
just
foolproof.
decentralization has its own disadvantages that don't serve marginalized groups either, because like how, you know, there's a reason why there's an FDIC. There's a reason why to, you know, shore up against fraud, you know what I'm saying? And there's a reason why blockchain is advantageous from a criminal standpoint, because it allows offshore hiding your money, tax shelters, ways to, you know, keep money away from marginalized people anyways, you know what I'm saying? Like, and so there are caveats to decentralization. Like it's not going to be a panacea to ill intent.
I agree. There are things like, if I were to show somebody my wallet, I have a receiver. Like this, if I were to show you like the QR code, it just allows me to receive stuff. If you have that, you can't do anything with it. But if I give you my key to the wallet, that's a problem, right? And you got to get in and be real. Like, are some humans nefarious? And would I rather go into a weed shop where I know supposedly the government inspected the weed, I know supposedly that the weed is what they say it is, and that without giving my dollar, I'm getting what I'm supposed to be given. Like I want to buy an eighth, it's 3.5 grams. Or would I rather show up at Bob's house, be like, yo, here's $50, give me an eighth, and I just am cool with that. Now, can Bob rip me off and it only be 2.8 grams? Yep. Can it have bug spray on it? Yep. Can it be some Snickle Fritz and it's really CBD? Yep. That happened to us on 420. Bama came over here like, yo, I got the best weed ever, blah, 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 blah. That shit wasn't THC, you know? And so you're right. You're right. It's just, where's your level of comfort? Where is your level of concern? Man, you want to have a seat? Are you hanging out?
Well, I don't know.
We're doing a discussion on the blockchain, and we're almost done now. This is Melissa in the building. And so I'm not saying it's a panacea or anything's perfect, but as of now, let's say people point to the nefarious uses for Bitcoin or cryptocurrency. More cash money is involved in nefarious things than anything else. More black market shit is done with cash than any other form of exchange, so I don't know why people are really tripping. When I think about the government freezing assets, my friends working with some of the folks in Black Lives Matter, some of the founders or whatever, they have some problems right now because of how everything is centralized. So if there was a decentralized or encrypted communication form, if the government decides to say, we think you're a terrorist, we want to monitor your emails, they can't. There's no centralized database to go through your emails. And people that aren't terrorists aren't then getting harassed by the FBI. I mean, imagine when Obama stormed the Capitol, how many people in government were like, well, how could we have checked all the necessary communications? What they do with black people, you know? And so I'm not saying anything's better or worse. I'm just trying to identify, here's a survey. Here are the characteristics. And so like Kenneth's not wrong in what he's saying. And yeah, I think we're about, it's already 8:45. We went an hour and 45 minutes. I think we're going to be finishing soon. And I'll do another one to talk about the social experience I had at the conference, because this was all hella technical. But this was dope. Are there any questions for from what we talked about though? Are there any like kind of lasting questions? I know, Laura, you came in and you had some questions at the beginning. Did you want to ask them?
No, I mean, I think I'm done too, but it's awesome. I love hearing you talk about it. I like the way you bring it, you know, what you care about in this kind of stuff. And I think we just gotta, like, that's the whole thing. We gotta get our level up of, we gotta learn, right? If we want to pay attention and we want to do it, it's like, it's not an easy thing. It's not an easy question. I got to know more if I want to play, and yeah, I'm interested in it. So yeah, no, thanks for all your good juice. I'm good.
Yeah, I would definitely encourage people, when they hear blockchain, don't equate blockchain with Bitcoin or cryptocurrency. And to keep in mind that like cryptocurrency is one thing, Bitcoin is one type of cryptocurrency. Cryptocurrency runs on blockchain, but there are numerous blockchains, and different cryptocurrencies have their own. And to try to research the different parts and to have an understanding of where they work in relationship to each other. All right.
Thanks, Chris.
And yo,
I have
Rob,
a question, Chris.
go ahead. Peace, Laura. Yeah.
I was looking online. Laura, please stay. Everyone stay. I was looking online, and right now, the first cryptocurrency that they had, whichever first one it was, it's worth $34,000
Yeah.
to one.
Yeah.
Which now, but this, I can't understand how one cryptocurrency could be worth $34,000. That's 34,000 US dollars.
Yeah.
Does that mean 34 US dollars has a value that can equally match a value of one cryptocurrency? Explain that to me. How can they say that $34,000 is worth one cryptocurrency when cryptocurrency hasn't even been a real thing? You know, it has no real value.
So some of them are deflationary, some are inflationary, some get burned off. Like from every trade you lose, some of them in market. Some are generated as they're traded. And so it's supply demand, one. And so when more people want to buy than people want to sell, the price increases. And so when Bitcoin emerged, there were so few people interested in buying it that it was worth $200 for one Bitcoin because you couldn't do anything. You couldn't trade it. There were no marketplaces for it. No one wanted to take it. somebody was like, yo, I will trade you, I can't remember the exact amount, like I'll trade you 1 Bitcoin if you order me a pizza. And people are like, how are we going to order? What do you mean? You want me to spend my $20 to order you a pizza? You're going to give me a Bitcoin? I can't do nothing with that. Well, the person that did it is now sitting on a $30,000 pizza buy, you know? And it was up to 60,000 at a certain point. It went down to 5,000 at the beginning of the pandemic. I had no money. I was thinking like, I won't be able to work because I do events. That's a wrap. The business I work for does events. That's a wrap. And we run an art space. More money out the door. So I spent the little $50 or $100 I had to buy it. In the next 12 months, it went up to 60,000. It went from 5,000 to 60,000. If I had $50,000 to put in, let me do the math on real quick because I'm not such a good mathematician here. If I had, so like from 5 to 60,000, 60,000 divided by 5,000 is 12. So if I had $50,000, hold on, so 50,000 times 12, I would have $600,000 in a year from doing nothing.
600,000 Bitcoin.
No, $600,000. My Bitcoins would have been worth $600,000. If I invested $50,000 back in March or April, if I took 50,000 US dollars, converted it into however many Bitcoin there were at the time, and just waited 1 year, it would have been worth $600,000 at the end of that year.
Now the thing is that 600, that amount you have in Bitcoin, you got to find someone to buy that with US money.
Nah, you can now. There are markets where I can exchange it out. I can get US for it.
For Bitcoin.
Yeah. Most exchanges now deal with Bitcoin. Bitcoin's really easy to access. Robinhood, you can do cash. Like if you have a bank account, cash to Bitcoin. Cash App lets you do part of Bitcoin. There are a number of services. The difficulties are with altcoins.
So in the future, all the other coins want to get like Bitcoin. So everyone's now trying to get them to be the next Bitcoin.
There's some that want to do that, but there are others that are doing 500x, 50x, not 12. So they don't want to be Bitcoin. They want to be worth half a penny, one tenth of a penny, but have a lot of them in market. And then when it goes up to being worth a penny, you just 20x, 40x. So if you add 50,000, let me see here, 50,000 times 40, 2 million.
Whew.
But the coins themselves aren't worth 5,000, 10,000, 20,000 a piece. They're worth less than a penny a piece. It's like penny stocks. You ever seen Wolf of Wall Street?
Yes, I understand. I'm now the way you're explaining it, I understand, and it's really a gamble. And also, it's about the people, like the common citizens, like you and I. Are we going to trust this new technology in order to do business?
Yeah, and at a moment when Elon Musk said that Tesla would accept Bitcoin, all of a sudden, all it takes is certain industries to say you can use this with us. And that's going to change the whole game.
Respect. That's massive. That's massive. And it changes the game. We need to get involved in this and start our own, have independent musicians like you and all the brothers saying, no, I'm only selling my album on this coin, or I'm only, you want to come to my show, you got to pay with this coin. You want some of my product, you got to do it with this coin.
Exactly. Yeah. So I don't know. So that's kind of what I took from the conference, and I'm still learning. I am not an expert at all, and I probably got a bunch of stuff wrong. So if you talk to other people and they say, yo, your friend's an idiot, all right, I'll take that. But, at least talk to people about it. Hopefully we started the journey.
I'm excited to move forward with this Bitcoin because it's the future. I mean, even from what Akon is saying, when he builds his village in his own city in Senegal, it's only going to be used on a coin base that he's creating himself. So it is going to take the multimillionaires and the multi-billionaires to really create the infrastructure for this new technology to be used by the masses.
And the other reason I wanted to go to this conference is to encourage people to learn about the other businesses, that you won't have to be a computer programmer, and you don't necessarily have to invest in Bitcoin or in cryptocurrency. You can work for one of these blockchain companies as a salesperson, as a marketing person, as a community outreach person, as a strategist, as a manager. There are going to be industries that are built up around this, just like IT. You can work for Verizon and not know how to fix a phone at all. You know how to do graphic design and you make the brochures. You know what I'm saying? There are going to be so many options for people in these fields that run parallel. So sure, if you're not comfortable investing in cryptocurrency, you don't have to. You can just get a day job working for one of the companies. You can get a job doing, again, like video work when they go to their conferences and got to do PowerPoint presentations. There's going to be bread in all this stuff. Yeah.
Beautiful.
All right.
Thanks, guys. Have a good night, all right?
All right. Y'all be safe. I'm going to make sure I save this. All right. I'm going to stop recording now.